Are you trading with a small trading account size? Well, this new product is going to be perfect for you to allow you to capture the market opportunity with having less money in your account. Let's jump into this video and talk about the new E-Micro futures contract. All right, traders, here's the deal. So if you're new to trading futures contracts cover equity index products. There's a product for the S&P 500, NASDAQ, Russell, Dow Jones, and many other markets, including energies, metals, and even currencies. But in May of 2019, the Chicago Mercantile Exchange, also called the CME, is launching 4 exciting products that'll help new traders with smaller account sizes adjust to trading the markets in a live setting with less risk and less exposure. The 4 contracts are the Micro S&P 500, the Micro NASDAQ, the Micro Dow Jones, and the Micro Russell 2000 contracts. Currently, these 4 contracts already exist, but they're 10 times the size of what's going to come out. So these new micro contracts will actually be 1/10 of the position, allowing you to enter small trades and scale your way up. So what's the point of launching these contracts? Well, since the Chicago Mercantile Exchange cacame out with the E-mini in 1997, the notional value has gone up from $47,000 to over $125,000 as of December 2018. The CME recognizes that these contracts have become largely unaffordable and highly leveraged for the everyday individual trader. And so they've decided to take action by launching these new micro contracts. So let's look at these markets. First, let's start out by talking about the 4 regular size contracts and how much money they move for every 1 tick. First up is the S&P 500 index. These are the 500 biggest companies in the United States, and they're called large cap or large capitalization shares. The S&P 500 futures trade at $50 for 1 single point. Every point the S&P 500 moves either up or down, the futures contract at the moment fluctuates by $50. But 1 point is further broken down into 4 underlying points, or called ticks. A tick is representative of 0.25 points. Each tick is valued at $12.50, therefore 1 point movement equals $50. The new contract is going to be just $5 per point. All right, so here we can see the S&P 500 traditional ES contract trades at $50, and the small micro is going to trade at $5 per point. Now let's look at another market, NASDAQ, which trades predominantly on technology stocks. The current futures value for 1 single point is $20. The symbol is NQ, which stands for NASDAQ. The new micro NASDAQ contract will just be $2 a point. And again, within every point, there's a 1/4 point of a move, or broken down into 4 ticks per point. The Dow Jones is currently at just $5 per contract on the mini, and the new one will be 50 cents for each point that the Dow Jones moves. A tick value, or the lowest increment of movement in the Dow, is 1 point. So 1 tick is equivalent to 1 point, and it's at 50 cents versus the 5 on the regular mini contract. And last but not least, you have the Russell 2000, which is the 2,000 small capitalized companies in the United States. Russell moves $50 a point, and now will move at a $5 scale on the micro. Now, as we can see, these smaller micro contracts on the very right side present traders lower leverage position opportunities. This means that with a smaller account, you're going to be able to get less of a position. You don't have to force yourself to take a big position only because that's what's available. These micro contracts, effective May, will allow you to scale your account as a beginner. And that is a beautiful thing, because we know one thing: trade pros are risk managers first, and they understand that risk management is the job and profit is the actual reward for being a good risk manager. Now let's look at a few other aspects of these micro contracts. We have to look at 2 more things in today's video. First of all, margin. Margin is defined as the amount of money that you have to put down from your account in order to gain access to a trading position. In the typical S&P 500 contract, depending on what broker you're with, which sets the margin guidelines, it varies in between $400 per contract for day trading margin up to as much as $4,000 if you're with a broker like Interactive Brokers. AMP Futures, which is our partner and brokerage of choice, provides $400 to $500 daily margins as long as you get rid of your contracts in the same session that you bought them. So a broker like AMP is actually ideal for day trading. Now, the last thing we want to cover in today's video is commissions. And this is the big question. How much is commission going to be, and how much will brokers charge you to trade these smaller contracts? Because using this example, our current commission rate for trading the E-minis or the regular S&P 500 mini contracts, which is $50 fluctuation per 1 point, the round trip cost, that is to buy and to sell one contract, is approximately $4, a little bit less or a little bit more depending on what broker you're with. And the question is, how much less is the exchange willing to charge for their exchange fees in order to allow these individual traders to gain access to a lower leverage product and to give them an entryway into the market? That's the big question. Now, if commissions are to stay at the same rate of $4 per trade, think about this. You would have to make 1 point on the S&P 500 or 4 ticks just to be able to pay for your commission. Because remember, the mini is $50 a point and the micro is $5 a point. It's 1/10 the size of the current contracts. So you would need to get 4 ticks or 1 point on the S&P 500 index of movement just to pay your commission and break even. And if you're using a stop loss, that increases your risk even more. So while this is a very exciting opportunity, it's still very new. The news hit the wire just several weeks ago, and we're gearing up to provide education around this product. But before we move forward with the development agenda, we need to find out what commission structures are going to be like and some more details around the launch of these products. They're coming out in May, and I hope you're super excited to trade these with us in our trading room. This means whether you have a small account or even smaller than that, you have an opportunity to day trade futures for consistent, profitable opportunity. So I hope you guys have enjoyed this video. If you have any questions, please comment in the comment section below and I'll personally answer them for you. And at this point, I want to ask you one question. When this product becomes available, are you going to take advantage and try trading these micro contracts? That's all we got for you guys today. Thank you for watching. Please subscribe to our channel by clicking here. And when you do subscribe, be sure to hit the notification bell to be alerted for every new video that comes out. If you want a copy of our 6-lesson futures course, click here and get started today. Thank you for watching. We hope you've enjoyed this video. And remember, manage your risk and trade like a trade pro. Goodbye.